Something huge is brewing in the beverage aisle. I mean, a massive shift is underway. The old soda giants are suddenly finding themselves in a fight with a totally new kind of rival, one that's all about functional nutrition, not just fizz and sugar. This is the story of a war for what we're all going to be drinking next, a real battle royale between the established titans and some seriously nimble upstarts. So here's how we're going to break it all down. First, we'll look at the cracks starting to show in the old beverage empire. Then we'll put the titans head-to-head against the trailblazers. After that, we'll dive into the new health revolution that's changing everything, check out the tech race for efficiency, and finally, we'll weigh the risks and opportunities for everybody involved. All right, let's kick things off with our first section, the old guard's dilemma. You know, for decades, the big beverage companies seemed totally invincible. But now, their old playbook for growth is starting to look pretty shaky. Okay, now check this out. This one number right here, this is the canary in the coal mine. So in 2025, PepsiCo in North America jacked up their prices by 5%. But people bought 3.5% less of their drinks. And that tells you everything you need to know. You can only hike prices for so long before your customers just start walking away. It's a strategy with a very clear expiration date. And this slide just lays out the core conflict perfectly. On one side, you've got the titans, Coke, Pepsi, Nestlé, and they're leaning hard on their massive brand recognition to push through those price increases. But on the other side, you've got the trailblazers, companies like BellRing and Vita Coco. Their growth is coming from the exact opposite direction. More people are buying more of their stuff. It's a classic battle of price versus volume. Yeah, and the problem for the giants is way bigger than just one number. They are sailing straight into a perfect storm. Those price hikes are basically hiding the fact that fewer people are actually drinking their main products. Health concerns over sugar, they're at an all-time high. Then you've got lawsuits over plastic packaging, and to top it all off, a slowdown in huge markets like China is hitting their global performance. It's a lot. Okay, so let's move on to section 2 and see how this all plays out. This really is a tale of two completely different business models. We're going to compare how these two groups actually operate, and you'll see their playbooks couldn't be more different. Now, this is fascinating. Look at this marketing comparison. Coca-Cola spends over 11% of its revenue on ads, just to keep that global brand on top and maintain that emotional connection. But then look at BellRing brands. They're spending just over 3% and seeing absolutely explosive growth. So why? It's because their product, the protein shakes, meets a very specific need. The product is the marketing. That's an incredible return on investment. So how do the giants even fight back? Well, here's the key thing to understand. They aren't just beverage companies anymore. They operate like these huge, complex platforms, using their incredibly profitable old-school businesses, their cash cows, to bankroll their big move into these new, high-growth categories. And this table just breaks it down perfectly. For PepsiCo, it's their Frito-Lay snack division with a juicy 22.4% profit margin. That's what's funding huge acquisitions like the probiotic soda brand Poppi. For Coke, it's their super high-margin concentrate business. And for Nestlé, get this, it's pet care. That's what's funding their deep dive into health science.
Wild, right?
But even with all that money being funneled in, just look at this chart. This shows how incredibly reliant Coca-Cola still is on its old business. A massive 69% of its entire global volume still comes from sodas. This highlights exactly why their pivot into healthier drinks isn't just a choice, it is an absolute do-or-die necessity for them. Which brings us right to our third section, the new health revolution. Because this shift isn't just happening in a vacuum. It's being supercharged by this massive external force that is completely changing how people shop and eat. We're talking about the rise of GLP-1 drugs. So what are GLP-1 drugs? You've probably heard the name Ozempic. Basically, these are medications that suppress appetite, and that's having this huge ripple effect across the entire food and beverage industry, creating this sudden, massive demand for products that are packed with protein and nutrients. And here is the connection, spelled out perfectly in this quote from HDIN Research. Companies like BellRing with their protein shakes are just perfectly positioned to ride this new wave. They are, like the report says, natural beneficiaries. I mean, talk about being in the right place at the right time. So how are the giants fighting back? Well, they're using a classic two-pronged attack. First, they try to reformulate from the inside. You know, think of Pepsi's new prebiotic cola or Coke's huge focus on their zero-sugar drinks. And second, If you can't beat them, buy them. They acquire their way into the trend, like Pepsi dropping almost $2 billion to snap up Poppy. But this isn't just a battle over products. And that takes us to Section 4, the race for efficiency. The new battlefield isn't just the grocery store shelf anymore, it's digital, and the weapons of choice are technology and data. You know, what's really fascinating here is that the giants are all running an almost identical playbook. They're pouring unbelievable amounts of money into the same bucket of strategies, putting AI into everything, automating their supply chains, focusing R&D on biotech, and using data to figure out what you're going to buy next. It's a full-on technological arms race. And this isn't just some corporate buzzword. Here's a real-world example. Nestlé is using what they call agentic AI as a virtual assistant for its sales teams. This tech is handling about 40% of their daily busy work, which frees them up to actually focus on selling. That is a massive gain in efficiency. All right, let's bring it all home in our final section, risks and opportunities. We've seen the strategies, we've seen the battle lines. So who is actually positioned to win this new beverage war? You know, the stock market has already started to weigh in. On the left, you can see Coca-Cola's stock has actually been lagging behind the broader market. But on the right, look at Vita Coco. Since its IPO, it has crushed it. So investors are clearly rewarding that high-growth story from the challengers. But it's not quite that simple, because both sides are facing huge but very different risks. The Titan's biggest risk is something called impairment. That's a fancy word for spending billions on a hot new brand that just fizzles out, forcing them to take a massive financial hit. For the Trailblazers, the risk is dependency. I mean, Vita Coco gets 96% of its sales just from coconut water. If people's tastes change, they could be in big trouble. And the cost of making a bad bet here is just staggering. This slide shows you the real-world consequences. In 2025 alone, Coke had to write down almost $1 billion on its body armor deal. And PepsiCo? A whopping $1.9 billion hit on Rockstar Energy. These are monumental mistakes. So the bottom line, according to the research, is this. The winners of tomorrow aren't just going to be beverage companies. The lines are blurring. To succeed, you have to master both nutrition science and digital efficiency. The future really belongs to these hybrid companies that are part food producer, part tech platform, and part health science lab. And that leaves us with one final and I think pretty provocative question. As this whole war plays out, who's actually going to win? Is the future a super efficient digital platform that just happens to sell drinks? Or is it a specialized health science company that happens to sell drinks? That is the billion-dollar question that's going to define this entire industry for the next decade.